All right, today we're diving into an investment that has absolutely nothing to do with the ups and downs of the stock market. While most of the financial world is glued to their screens, we're going to be looking somewhere totally different.
Yeah, you heard that right. We're talking about the soil. This is all about a strategy that aims to grow your income by restoring the ground itself. And it all starts with a pretty concrete number.
$5,000. We're using this amount because this isn't just theory. It's based on a real-world example of an investment into a very specific financial tool.
And that tool is what's known as a Regenerative Agriculture Bond. It's a way to invest directly into American farmland, but farmland with a very specific and I think very interesting mission.
This really gets to the heart of it. This isn't just about chasing returns. It's about a two-for-one deal, really. The idea is to earn a steady, predictable income and, at the very same time, help make our agricultural land healthier. So, why farmland in the first place? I mean, of all things, right? Well, in a world where the market feels more and more like a roller coaster, a lot of people are searching for stability. And farmland's big appeal is that it's what financial folks call an uncorrelated asset.
Okay, let's just calmly break that down. All this really means is that the value of a farm isn't tied to the daily drama of Wall Street. It doesn't really care what the latest tech stock did. Its value is based on something much more real, much more fundamental.
And this slide just lays it out perfectly. On one side, you've got the crazy ups and downs of tech stocks, which can swing wildly based on market news. And on the other, you have the stability of farmland, which, it operates on the cycles of nature, planting and harvesting. For a lot of investors, that makes it a really powerful anchor in their portfolio. Now, that word regenerative is actually key here. It's not just some feel-good label. It's a genuine risk management strategy. See, when you restore the health of the soil, the farm needs less expensive fertilizer, and it holds on to water way more effectively. For you, the investor, that means the farm becomes more resilient to things like drought, making it more profitable and ultimately a safer investment over the long haul.
Okay, so this all sounds pretty good, but you're probably wondering, how does a regular person even get a piece of this? Because traditionally, investing in farmland has been really, really hard. Let's look at how that's changing.
And let's be real here. If you wanted to do this the old-fashioned way, through something like a private REIT, that's a real estate investment trust, you'd often need $10,000 or more just to get in the door. And usually, those were only open to the wealthiest investors. But this is the game changer. There's a specific rule from the SEC called Regulation A+, and it basically opened the door for everyone. It lets private companies raise money from the general public, not just the super rich. This is the key that unlocks this entire type of investment for the rest of us. So once that door is open, the process becomes pretty simple. A company uses that Regulation A+ rule to offer a farm bond. You buy the bond. Your money is then essentially loaned to a farmer who's making that switch to regenerative practices. And for loaning them your capital, you get paid a fixed interest rate. Simple as that.
Okay, let's get to the fun part, the numbers. What does the return on something like this actually look like? Let's take a look at the wealth script, the actual math behind this bond.
So, we're back to our starting number, that principal investment of $5,000. Everything from here on out is based on this amount. The bond in this particular case offers a fixed 7% annual yield. That's the interest rate you earn on your money every single year, guaranteed.
And here's how it all plays out. On that $5,000 principal, a 7% yield means you earn $350 a year. This bond pays out quarterly, so that's $87.50 landing in your account every 3 months. It's not going to make you rich overnight, but it is predictable, it's reliable, it's like clockwork. And just a quick practical note, for anyone investing in the US, the taxes are super simple. Because this is interest from a bond, you just get a standard 1099 INT form. You report it as interest income, and you're done. No crazy, complicated paperwork. Now, we absolutely have to talk about what I think is the most important part of any investment analysis, the catch. Because nothing is perfect, and it's so important to understand the downsides before you even think about putting money in. The biggest risk here is what's called liquidity, or more accurately, the lack of it. This is an illiquid asset. All that means is you can't just wake up one morning and decide to sell it in 5 seconds on an app like you would with a stock. So here's what that really means for you. Your capital is locked in for the entire term of the bond, which is usually somewhere between 3 and 5 years. You're making a commitment. And of course, remember, this is farming. It's tied to the real world, which means it's subject to real-world risks, like bad weather or pests or anything else that could impact a harvest.
This quote from the source material just sums it up perfectly. This is the kind of investment that belongs in the stable, steady, long-term part of your portfolio. This is absolutely not the place you park your emergency cash.
Okay, let's tie this all together. The final verdict. When you look at the whole picture, who is this dirt dividend really for? Well, it really just depends on what you're looking for as an investor.
And this makes it crystal clear. If you are chasing that 100x return, that get-rich-quick moonshot, this is not it. Not even close. But if you're looking for a stable, predictable stream of income that's also connected to a real, tangible, positive impact, well then this starts to look very, very interesting.
And that really is the final question to leave you with. In a world that feels increasingly digital and volatile, maybe the smartest script for building your wealth is one that's a little more grounded. You know, quite literally, in the earth itself. Something to think about.